Good evening and happy Valentine's Day, everybody. It's Wednesday, February 14th, 2024, here at precisealgorithmtrading.com. And let's look at the markets. So, our automated trading systems today, our Dow futures continue to put in new equity peaks, which is nice. The green dots are new highs. And today's action, really not a lot to it, but I'll take it. It's a win. Um, the Russell, same kind of thing. Today's action, same, but it was actually a bigger day. So some good trades there. The the Nasdaq, not as good, but I think we're setting up for a new move higher, and that's all right. So we've got less wins today. Just one winner and four losers. So that's all right. This stuff. That's what I'm talking about when I say these things are not correlated, and that's the reason we have multiple systems. So, all right, let's go to Thinkorswim and look at the overall markets. So this is the E-mini futures for the S&P 500, and this is the daily on the left and the hourly on the right. And something to note so these are one day between these dash lines, these dash vertical lines. So today's action gapped higher, pulled back, closed that gap right there, and then went higher. And you can see it was really yesterday's action that we got the gap lower and a bigger, play down into all this support, these lines I've had drawn, and this is a special support line here, and that's where we got our bounce. So, look at over here on the daily. Those are the same lines because you draw them on one chart, they show through with the way we have our settings set up. And it happened to come down to pretty much the 30 period moving average on the daily where it bounced and started to bounce higher. So something I want to get at here is we had this gap lower, and gaps tend to get filled. I've been talking about that. And look where we're coming. We're possibly coming up to close in this gap, which would get us back up to the upper Keltner channel in this case. That's two average true ranges away from the mean, up and down for what it's worth. And by the way, the 30 period moving average here has turned green again, and we're back above it. So technically speaking, that's a buy signal on the hourly chart, and I'm not saying this thing's going to go up and start making new highs, because this was a break in trend. We were going higher highs and higher lows. We came all the way down here. Arguably, it's not a total break in trend because this pivot isn't below the last real major pivot, but clearly something's come undone here. It's just not. It's not totally undone because of this low here, and this is still a higher low. We've taken out some of these intermediate higher lows, but we haven't taken out the main ones to really create a new downtrend. I'm not even sure we're going to, because this could come all the way back down on the daily chart into this green zone right here or above it, and it wouldn't take out this pivot, and we could go back higher from there. So for the short run, we could be going lower. Actually, for the real short run, I think we're going higher on this hourly chart. And then, but for the short run that's not quite into Friday, maybe in the next week, I think we're going to go lower. We're going to come back down to the bottom of this channel, and then from there it's a question of, do we bounce again, or are we breaking this channel, coming back down here? Where are we going to find support? I've got a few ideas, and are we just going to take off from there? So we watch the bullish percent indexes for that very reason, start to see some turnaround, and but in the meantime, sure, you get an unwinding like this in a bullish market over here on the hourly chart. A whip back to the mean makes a ton of sense. The mean is roughly between these. I mean, it's roughly the 30 period moving average, but it's the area between these two white dashed lines, and that's where we're at. We're right in the mean. So um, before I think too far and look at other markets, let's look at the VIX, because we got this big move yesterday on the VIX outside of the Bollinger Bands to the upside. Pulled back in. Now we're back inside the Bollinger Bands, but obviously the Bollinger Bands have expanded. So if you look back on a chart and you drag this thing back a long ways, is this move like normal, and would you consider it to be over? I'm telling you, probably not. That doesn't mean we're going to get a spike tomorrow, but I think we're going to see something, where we got to move higher like this, a pullback, and then you're going to see probably the VIX doesn't quite work like stocks, but you're probably going to see some higher highs and higher lows come out of this, at least for a bit, until this thing gets back to where the markets get calmed down, and you have to unwind some of this major bullishness that we've had lately. And I don't care why. You can think about the news or the politics or anything else, but and the inflation that's going on, and there's a ton of things that play into this, but none of that really matters when it comes to trading, because it's all baked into this price, and you don't have to care to the why. You just have to follow the signals. So as weird as that sounds, because I'm a big why guy, but you just kind of have to be like, I do keep up with the news. We do follow plenty of world politics, United States stuff. There's a whole lot of all that, but you can drive yourself crazy, because you can't. I don't think you can keep ahead of it far enough to actually uh, really take that all in and make good investing decisions when it's all right here in the chart. So that's anyway the platform I'm stepping on. This is that's our take. So all right, I'll stop preaching and we'll go on to the Russell. Look what it's doing. So the Russell, I talked about this, pulled way back in after this breakout. Clearly higher highs and higher lows. We have not broken this pivot over here, and maybe we won't anytime soon, but that is a nice big move that's back out of this broken channel. And so you had the break of the channel, and you had a head fake back in, and then a breakout. If we look at IWM, it's the ETF associated with this thing. This pullback happened, and then this is technically a new buy signal. So that was a buy signal the other day. That pullback is totally normal inside of something like that. You can put your stop down here. I've widened it just a little bit, but I'm playing this thing to the upside because all the signals are there. This is clearly a break to the upside on the hourly chart, of a change in polarity, and that's anyway. That's just, this is a study in and of itself, that this is like a wash, rinse, and repeat kind of a process. So as much as that is a hard trade to take after a day like yesterday, and I'm not saying it's going to make it, because it could fail. All right, moving on. That's the Russell. The Dow. Let's zoom in on that a little bit. I don't have a lower channel drawn on the Dow, and at the same time, do it. We'll go up here, pick a line, snap in here, snap in there, and extend it to the right. It's not perfect, but this is an upward sloping wedge, but you can see it's not just a channel. The two lines are coming together. So even if I do activate drawing and drag this down a little bit, it's still a wedge. So wedges always tend to break to the downside eventually. Upward sloping ones. Downward sloping ones are the other way around. So nothing to really do for it. We're still bullish on all the stuff, but we are flattening out on the Dow. So looking at yesterday versus today, the Dow's back up 0.4%. I think yesterday it was down 500 points. Today it's back up 151. So we didn't quite unwind it, right? It would even be more impressive if, I guess, and maybe more potential for this thing to continue taking off to the upside, if today's candle would have gone more than 50% back and closed above that 50% line of yesterday's candle. And I don't think it did. Without measuring, I'm not 100% sure, but I don't think it did. So and it's clearly not above this 50% line. That's the yellow dash line, which is the recent move lower between the two pivots. So that is what it is. I'm just saying that there's still more room, and the path of least resistance it looks like it's down to me. At least back to this 2 average true ranges to the bottom here. The NASDAQ was back up 1.3% today. I can't remember what it was down yesterday, but I think it was 2% or so. And it's whatever. It looks healthier than the Dow does. We're still moving higher here, but when the markets decide to give up and go back to their mean, which they did here, but I'm saying there's other means. If we flip this thing to a weekly, the mean on the weekly is all the way down here. And eventually we're going to hit it. It's just a matter of where's the mean going to be when we do that. And while we're here, look at a monthly. Everything's still moving pretty higher during the monthly, so we'll just continue to watch it on the daily and work it that way. All right, the transports. Just a doji today. Nothing really to write home about here. Maybe a little bit more bullish than anything else. And let's finish off here with oil, which I think USO pulled back 1.51% today. Is oil done? I wouldn't think so, but it might be. I think we're fine, but I am profitable in oil at this point. So I am probably going to start watching it off of the hourly time frame, which at this point I'd pull my stop up to here. And the question is going to be, do I really want to do that, or do I want to continue to let it play out on the daily chart? Because when the oil does get up and going, it can go quite a bit. And the question is how much tolerance do I want to have for that? That's really a personal choice. All right, gold, since we haven't looked at it in a day or two. It fell apart the other day, and now it's down below or around its two average true ranges to the bottom. This is a rounded top. It sure feels like that move is over, and we're going to be going back and seeing some lower prices, but there's really nothing to get too excited about here. It's not a trade I would take. You could have taken it the other day on this downside, put your stop either above this pivot or that pivot, and you would have been in the money by now, but this is not necessarily a way I trade. So, at least not when I've got plenty of other options. So, um, that's gold. Let's look at BITO because it is moving. Had this big pullback, and now we've zigzagged our way back up again. So, all right, that's the markets for today. Just seeing if there's anything else I want to call out here. I'll leave it at that. So let's go over to stockcharts.com, type in bullish, and we'll look at all the indexes. So now the industrials have rolled over to a new column of O's on a day like today. So a lot of volatility. This stuff happens kind of behind the curtain. If you don't know what it's doing, then this can catch you by surprise. This is one of those cases where I fully expect us to get. I mean, we'll have to watch it, but I'm expecting this will turn into a point and figure sell signal. And if like I say, next week I think we're going to unwind a bit. So I think into the end of this week we might not. We might get some of that into Friday's close because people in a market like this don't want to hold over a weekend. But that doesn't really change the way we trade. So that's in the industrials. The NYA up 0.59%. The transports tacked on two new O's and went minus 8.33% today. The NASDAQ up 0.98%. The S&P 500 up 0.94%. The S&P 100 up 1.67%. And the NDX, the NASDAQ 100, up 1.47%. So the major disconnect between these actually I consider to be it's not all unwinding at the same time. So that's not totally bearish, and that's because it's not. It's pretty bullish, actually. Things holding up the way that they are. So I think this is going to be a structured sell-off unless something blows up and all of a sudden everything gets crazy. But this is the kind of point and figure sell signal that I'm showing right here, or that's showing here, that I'm expecting to happen on the industrials. And don't forget, or it's happened in the past. We got this point and figure sell signal. The industrials could turn into that. This could actually flip into a new column of X's even when that's going on, and that shows a disconnect between the markets, which it would be good, and it would be more productive than if everything just decided to sell off. Then all of a sudden we begin kind of panic mode in the markets, which turns into a bear market really fast, or it can. So that's my take for tonight. Again, we will catch you I guess we'll catch you again tomorrow night. And this weekend I'm going to be doing some traveling, so this is going to be spotty really over the next week or so. So until next time, take care and have a great night.